Hello ladies, and welcome back to my channel. If you are new here, welcome, and if you are a returning subscriber, ngiyakubona wena girl, I acknowledge you. Over on this channel we talk about personal finance, adulting, and just living life meaningfully. In today's video we are going to be chatting about how exactly investing in shares works. We are going to be covering 1, what exactly shares are and how they come about, 2, what it means to invest in shares, and 3, how we can make money from those investments. Let's get into it. So what exactly is a share? The most simplest way to explain it is that a share, otherwise known as equity or a stock, is a piece of a company. Essentially, there are 2 types of shares: public or publicly traded shares, as well as private shares, more commonly known as private equity. In this video, we will be focusing more on publicly traded shares because that's what is more accessible to you and I as everyday people. So publicly traded shares are essentially pieces of companies that are sold on a stock exchange, such as the Johannesburg Stock Exchange, the New York Stock Exchange, the London Stock Exchange, or even the Shanghai Stock Exchange in China. You can think of a stock exchange in a similar way to how you think of imakethe, where you go to buy your fruits and vegetables. The stock exchange is kind of like the marketplace where you go to actually trade and buy or sell fruits and vegetables. And then you can think of your stocks or your equity or your shares as the actual items that you are buying and selling at this marketplace. Now, how do shares actually come about? Let's have a look at Uber, a company which most of us are actually quite familiar with. Uber, which is a San Francisco-based company, was officially founded in 2009 by a guy called Garrett Comp. And it officially launched its mobile application, the app which you and I then use, in the year 2011. Now, for the first couple of years of its existence, Uber, the company, operated privately, meaning it was owned by private individuals or even possibly companies, but you and I as everyday people didn't have the ability to just go and buy a share or a portion of that company. Being private essentially meant that if the business needed capital to, let's say, expand its operations and grow the business, either the current holders or owners of the business would have to take money out of their own pockets and sow that money into the business, or they would have to go and get credit. Being private also meant that any profits which the business made, only the current shareholders or owners, which were initially just the founders, could be able to actually share in those profits. However, in May 2019, the company decided to go public, or to go and list themselves on a stock exchange, where everyday people like you and I then had the capacity to be able to go to the exchange and buy a piece of the company, and so also be able to share in the profits of the company. And when a company has been trading privately and then makes the decision to go and list themselves publicly and trade publicly, we refer to this as an initial public offering. This initial public offering, otherwise known as an IPO, happens under 2 circumstances. Either 1, the company needs to raise specifically a high amount of capital to, let's say, sustain the business or expand the operations of the business, or if the actual owners of the business kind of want to sell a huge chunk of their ownership in the business and kind of make money and buy private jets. And so when you buy shares in a company, you become a shareholder or an equity holder, and you can have then the rights to say that you own 0.001% of Uber, and if you are a much higher net worth individual, you can even buy bigger stakes in these businesses, like 5%, 10%, 15%. As a shareholder, you have specific types of rights when it comes to the actual business. Sometimes you have voting rights in the decisions that the business makes, and more importantly, we are then entitled to share in the profits which a business makes and decides to distribute. And so essentially the true meaning of investing in shares is that you are buying a piece of the company right now at a particular price, with the hope that you will be able to generate money from it going forward. Now, how do we make money off of the shares that we invest in? There are 2 ways to make money off of shares. The first is dividends. This is when a company makes a profit and decides to distribute a certain portion of that profit to shareholders. Let's look at Uber again as an example. Let's say in the year 2020, Uber made a 100 million rand profit, and it decided to distribute 60% of that profit, aka 60 million rand. And there is currently 1 million shares that are in issue. This means that each share would receive a 60 rand dividend. And so if you own 1 share in Uber, this means that you would get a 60 rand dividend. If you owned 100 shares in Uber, this means that you would get 100 shares multiplied by 60 rand per share, which is equal to 6,000 rand. And if you own 1,000 shares in Uber, you would then take 1,000 shares, multiply them by the dividends per share, which would then be 60,000 rand in dividends, which you would earn in the year 2020. The second way to earn money on your shares is through capital gains. This is when you buy a share at this particular period in time, wait for the price of that share to appreciate or to increase, and then sell that share off. The profit which you then make off of that is your capital gains. So if you, for example, bought a share from Uber on the 15th of November 2019 when it was trading at $26.18, and then sold that share on the 22nd of January 2020 when it was trading at $37.94. This means that between November 15th and January 22nd, you would have made a profit of $11.77. And if you had bought 100 shares instead of just 1 and sold all those 100 shares, then your profit or your capital gains would be $1,176. So now that all of us understand what exactly shares are and what it means to invest in them and how to make money off of them, in the next 2 videos, I'm going to be discussing how you and I, as ordinary everyday South Africans, can actually buy and invest in these shares, as well as when it is actually appropriate to actually invest in shares. If you have any questions or comments about this particular video, please go ahead and leave it in the comment section. And if you did find some value in this video, please go ahead and give it a thumbs up and consider subscribing. It really supports my channel. Thank you so much for tuning in, guys. Bye.